Hello there, this is FairBinaryOptions.com. Today's analysis is about the US dollar, Canadian dollar, as we're heading this week into the FOMC statement on Wednesday, and we're heading into the Canadian CPI or inflation or consumer price index on Friday, and it is important to understand what this US dollar, Canadian dollar price action means. I would say that from this vertical line, so from this moment of time on the right side, we have the beginning of an impulsive move, and this impulsive move is being formed out of a first wave that is done in here with a five-way structure. So this would be our first wave. Let's make it in red. The five-way structure is actually a structure with the first wave extension. It goes from here 1, 2, 3, 4, and then the fifth wave like this, and then we should look for the second wave. The second wave, from my point of view, ends only here with the contracting triangle, namely here, and it means that our move here is a complex corrective wave. It is being called a double three running. This move here is being called a double three running, and it is always being followed by a third wave extension. What should be the labeling of this whole move? This would be wave A, B, C, then we have an X wave all the way to the upside, and then a contracting triangle, A, B, C, D, E, Elliott waves in its pure complex formation. The contracting triangle, by the time it has been broken, gave room only to upside on the US dollar and Canadian dollar pair. Well, I would say that that upside is not even completed. Why? Because, like mentioned at the beginning of this recording, we need now a move that goes 161.8. So we take the Fibonacci expansion, we go from the lows, we go to the end of the first wave, and we go to the end of the second wave here, and market now should go 161.8 when compared with that level, and that means 1.1831, and it's quite a high value when compared with the levels that we have right here right now. So this would be the normal target if I were to trade the spot market, but we are trading binary options. More importantly, all these price action or all that target should come with price staying above the 0 to 2 trend line. So this is a 0 to 2 trend line. So if you see a piercing of this trend line for whatever the reason until the target comes, it means that it's only an invalidation. So the third wave out of this degree needs to come without piercing this trend line. Well, it is only a bullish scenario then. If you can see here, the market is forming yet another triangle, so we might have another 1 and the 2, and then to gap higher if you want in an aggressive move. We should look for this B2D trend line here now to be broken. I would say it's going to be broken, and being a 1 hour chart, most likely it's going to be broken today, and it will be only a confirmation that we are positioned here for the right side. So how to trade this one? I would like to buy call options, so buying call options with end of week expiration date, and in this way we are avoiding the FOMC on Wednesday, but we are staying for the CPI on Friday in Canada. Thank you very much for being here. This is FairBinaryOptions.com. A classical impulsive move for the US dollar and Canadian dollar, which implies that this market still has a lot of room to go to the upside towards 1.18, only to complete the third wave in a classical impulsive move with a complex corrective wave for the second wave. Thank you and bye bye.